Welcome to another episode. Today we have Mark Leverett with us. Mark, thank you so much for joining us, sir.
Happy to be here, Tony. Thanks for having me.
Yes, sir. Mark's out of San Francisco, California. So I was just telling him we're on opposite sides of the world, I feel like. Uh, big time differences. But thanks so much for joining us today, Mark. So could you give everyone a little bit of a background about you, what you're doing now, and how you got into it?
Sure, I can. So I'm an accountant. I'm a partner with BPM, which is a firm. Really, we're nationwide, but we do have a focus on the West Coast. Most of our offices are here, but also international. I'm from the San Francisco Bay Area, but my clients are spread out across the country. I also lead the real estate practice for the firm. So that encompasses developments, private equity funds that hold real estate and alternative assets, construction companies, as well as mom and pop operations, so property management and the like. And I also lead our client accounting services group. So I'm happy to delve into any of those and excited to tell your listeners what I do and why I'm passionate about accounting.
Awesome. And how did you get into accounting?
I got tricked, actually, Tony. I was a student at UCLA and found myself in the dot-com bubble burst in 2000 and 2001. I had an education that also included some of what was aspiring to be the new dot-com future. I went to London School of Economics and got a special business designation for e-commerce. But it was gone when I graduated. And so while I was looking around, I had a minor in accounting. So I thought, hey, I'll do that. Well, the accounting firms were not hiring. So instead, I went up to the mountains and tried to be a ski bum. And they tricked me to go into the accounting department. They said, look at this resume here. You shouldn't be lift ops or ski instructor. You should go to the accounting department. And I'm glad they did. I got to work with some really bright people, the controller, the CFO, and gave me some good direction in life. A couple of years later, I decided to leave the mountain and join my first firm in Los Angeles, California, doing audit. And the history writes itself from there. I'm happy to go into any details.
When you say you started doing audit, were you doing was it federal audits or was it internal audits?
Good
What type of
question.
audits were you doing?
Yes, I was focused on being a independent third-party auditor for private companies at first. And then we did have a public company audit department. So within a CPA firm, the audit department is the assurance department with an A. And the assurance department really works to be an independent third party to verify financial information. The highest level of assurance is an audit. And we sign a report that basically says that these financial statements are complete and accurate in accordance with generally accepted accounting principles. And the bankers and investors can rely on them. And that's what I did for the first 15 years of my career. I really focused on audit, both private and public companies. And it's a really interesting part of the profession, and it's a great place to learn about financial statements and FP&A, financial planning and analysis, and a lot of what I do today on the advisory side.
Awesome. So that's good that you brought that up. Financial planning and analysis. For people that don't understand what that is, could you describe that a little bit?
Sure. The FP&A function is really it's the managerial accounting, but it's what matters from an investor's perspective as well. So what kind of internal rates of return, what kind of growth is possible? What are the drivers that change the business from where you're at to where the future state you hope to be is? Drawing those future plan lines is important because it tells you if you're going the right path and you can test your theories. And obviously, when you're doing your merger or acquisition transaction or going public, the investment bankers need to know what your plans are. So that's really the FP&A process, analyzing what's happening today, actually, but drawing the future projections as well.
And typically, when you're doing that, are you working with the clients that you dealt with? Did they already have a controller in place and everything in place, or would you go in businesses that didn't have formal finance or accounting departments?
Typically, they will have some semblance of an accounting department in place. For the companies that are sustaining a real GAAP audit, a generally accepted accounting principles audit, they need to have working financial information that is in proximity of GAAP, meaning that they know what they're talking about, and they may not have everything right, but the auditor is there to make sure that before the financial statements are done, they're completed. I will say that some of the private companies we go into, they have less sophisticated accounting and finance operations at points. Other times, companies that are aspirational to go public or have raised significant capital, they'll have very robust internal offices and a strong CFO that makes sure that those financial statements are really robust and sound from the perspective of their investors or the bankers that are looking at it. But there's a wide gap between. And I can tell you stories of mistakes that get into those financial statements that you find as an auditor. And it's, you try to not embarrass anybody. But when your audit antenna go up, that's the kind of, that's our terminology in the CPA world. We've got these antennas, and when we see something that's a little bit funky, we get curious and we ask more questions and we dive deeper. And we can't say that everything's perfect because you can't audit every single transaction, but we do a pretty good job using statistical analysis, sampling procedures, and when our audit antennas go up, we kind of find things and we have interesting conversations. Sometimes we find fraud. Yeah, it does exist out there.
Right.
And it's a really great place for anybody getting into the profession to start. There's really two places that people get into our profession. It's tax or audit. Those are the primary CPA roles.
I see. So could you give us a couple examples of some stuff that you've uncovered that was out of the ordinary and unexpected, and kind of how did you approach it, and how did you what was the result of it, I guess?
Well, I'll give an example. I'm going to try to code this so you can't figure out who it is, but the major developer doing a 300 unit apartment building, and you start to decide you're going to audit some of the procurement around the building. So you think, oh, an easy one is toilets.
Right.
So 300 units, all of the units are studios, 1 bedrooms. There's a few 2 bedrooms. Well, why is there 1,000 toilets purchased? So there's a couple extra there. That's one that we found. Another one is pouring concrete into a major sports facility, and we were doing a reasonableness analysis on how much concrete was purchased from the contractor, the subcontractor pouring concrete. And it was pretty obvious it was over by 25 to 30% of what could possibly be in there from cubic yard perspective. So change orders got reversed, averted any fraud allegations. These types of things pop up, usually using just reasonableness analysis, but also some specific testing. And I got many more if you're interested.
Sure. Well, I mean, so when you're encountering something like this, and these, you're just in doing an audit, so you're not working for them. So that's very interesting that you're going in that circumstance. Let's talk with this concrete, for example, where you were called in to perform this internal audit, and then was the job still active? Because you're saying they were able to claw back a
Mhm.
change order and basically capture savings of the 25 to 30% on the concrete GC, which is pretty amazing. So they to have that much, I guess, when you're there to have all that knowledge and they still hadn't released those funds, that much of those funds.
There's a lot of different types of attestation reports where we're opining on financial information. Like I said, the highest level is an audit of overall financial statements. So that means that you're looking at the balance sheet, the income statement, statement of cash flow, owner's equity roll forward, and
Mhm.
full footnotes. So that's an audit. There's also other types of examinations. In the example uh, for the concrete subcontractor, we were doing agreed upon procedures for the bank around specific subcontractors. And so we were brought in specifically to make sure that during the construction process, we were sampling and testing and giving that level of assurance on certain information. We could have designed and we suggested that we would have somebody stationed on site and actually perform observations on site. We also
Mhm.
suggested just a reasonableness analysis of invoices, and they went with the latter, and we still found fraud. That also opened us up to going in and doing more work. So that's the way these types of things work. Is if everything's working perfectly and we feel like no audit antennas are going up, we might be able to do a low level of work. And other times we might recommend, obviously, management or the bank or the investors ultimately make the decision of how much diligence we do. But we're here as an independent third party to be able to help out. And it costs money, but as you can hear from the examples, you can find quite a bit of potential savings from doing this type of work.
Yeah, absolutely. And obviously the savings way outweigh the fee that's being charged. That's the appeal of it. So obviously when if you have the capacity on the job, it's relative to the job size, obviously. So
We're
you're
talking millions of dollars in the
yeah,
case of the concrete reversal.
right, right. And then your fee is it pales in comparison.
Ales. I wish we could get a fraction. Uh,
We
yeah,
should get a percentage of savings. But I
we
will
can't.
say
But by our CPA license, when we're doing attestation, we're not allowed to have contingencies. We have to work for essentially hourly rates, but we can have a agreed upon project that is reasonable.
And so when you're doing these different types and forgive me, are you still doing audit work? I know you said you're doing it for 15 years. Is that something that you're still practicing or are you in
Well, I'm a senior partner within the firm, so I like to say I represent all of the different departments that we have, and I'm pretty knowledgeable in most, and I know how to get the answers on all. I'm very connected with my partner group and the directors that run the sub practices, and we have very specialized groups. We've got an appraisal group. We have a business valuation group. We've got a cybersecurity group that goes in physically breaks into offices to show the boards of those offices that they can do it. So we've got all
Wow.
different walks of life. Audit, tax, and advisory has a bunch of different subcomponents. On the audit side, we talked about a few. On the tax side, it's equally interesting, but I probably know the least, or at least I get my hand slapped the most by those
Mhm.
partners telling me to stay in my own lane. But there's a lot of savings to be had if you work with the right tax partner. And we've got corporations in real estate and construction, mostly pass-through entities, a lot of S corps, and structuring around with the attorney's help, structuring around liability protection, structuring around individual jobs or special purpose entities. It's really an interesting area. I have to understand it enough so that I can do the accounting work for my clients. But I always team up with the right partner in each of these groups.
So tell me a bit with the appraisal side, what does that look like?
Well, that's where it's a black box and you drop something in there and you hope that it comes out the other end at the right price. No, I'm just kidding. It's a science. It's a very methodical process. The partner who's in charge of that group, Kent Moyer, has an amazing background and has seen many different businesses. Within his practice, there's a significant amount of real estate and contractor groups. There's even he has within his practice an appraisal group. So actually valuing individual buildings. We don't do single family residential homes, but we do anything bigger than that. And everything through data centers or biofuel energy production facilities, hospitality, land value that is entitled, which, at each stage of entitlement, different values happen.
Mm-hmm.
A lot of that comes in too with ultra high net worth, where if there's investments that need to trade hands between trusts, foundations, after a passing, that's where that group really steps in on the real estate side and helps out with the best process to get the right valuations so you can move the real estate.
And so on that, I mean, we're not talking about accounting. We're right. I mean, we're just
Well,
it's just an appraisal, but I'm trying to
it
understand.
is.
You guys have a vertically integrated group that's all dialing in together from different aspects of the construction and real estate, where you're entering all different areas, where you're offering different services. So you vertically integrated. Is that what I'm understanding?
That's right. So, from a tax perspective, there might be one set of concerns and strategy because you want to accomplish something over an allowable timeline before a transaction happens. And there's a lot of different reasons why you need to work with the right attorneys and CPAs to get ready for a transaction. One of those transactions is, at the passing of an individual. Another is well ahead of that to make sure that you set up your family with trusts or maybe even a foundation. And the valuation group understands the ownership at each of these different periods, and there's an adjustment that needs to be done, which is debits and credits. It's accounting, so that you can keep track of what that value is in each entity and at the right time, and that you've got the right file that is compliant with a documented valuation at a moment in time. And what's interesting about this is you think of a piece of property having a value, but in the hands of an entity that is 49% owner, it is a different value to that entity than if that entity was a 100% owner. And so that's the discount for lack of marketability or minority ownership or lack of control. All of these things can adjust the value. And if you do it under the right guidance, you can achieve what you're trying to accomplish. So you need to work with the right providers to talk through that strategy. Another component, Tony, that you probably have heard about is tax-deferred exchanges. So there are moments in time where you feel like you've accomplished what you're trying to do with one property and you're ready to move that net asset value into something else. And so those types of transactions may benefit from the right movement of the asset. You might have multiple partners involved before that happens, and some of the partners may want to stay in that asset. So you need valuation professionals and tax strategy to make those types of transactions happen as well. And my team works together, like you said, vertically integrated to make it happen.
Right. So for something like that, if some are trying to dispose, you might have to restructure it to a tenants in common formation before you can, dispose of the asset, and you have to do it in a certain amount of time before you dispose of the asset. So it's not looked at as something that you're doing just to dispose of the asset. So a
That's
lot
exactly right.
of complex maneuvers. So yeah, absolutely. If you're offering that guidance and then you're going through business, it's quite comprehensive. all the different sectors that you're in. And just to reiterate, your main focus in this has, and your niche as a partner is still on the audit side, or are there other sides that you specialize in as a partner?
Yeah, I've properly confused you with a sleight of hand, but I am no longer in either of those.
Good,
I lead the real estate practice in our go to market strategy as a firm,
good.
but I
Yeah,
am in the
that's what we're
advisory.
trying to transition because I'm getting
I
confused.
I am trans. I have moved over, and I did officially 10 years ago into our advisory practice. And my specific niche within the advisory practice is client accounting and advisory services. And there are 8 partners within my practice, within the CAS practice is what we call it. And we help companies get the right accounting platforms stood up. We coordinate with the attorneys and the CPAs that are providing the entity structuring, and we coordinate with the valuation professionals to help us adjust the books according to fair value in some cases, or transaction value. And we do the debits and credits, and we create the financial statements themselves. The CAS practice is, think of us as back office accounting for your business. And we do it as a fractional or a complete back office, including CFO services in some cases, or FP&A services, full controllership, and even accounts payable functions. So we'll pay bills, we'll get the purchase orders ready, the sales orders ready, we'll close the books at month end, and we'll even have discussions with bankers or your investors. One of the latest additions to our practice is fund administration. I don't know if you've heard of fund administration before, but this is where we mind the cap table. So if you've got many investors and they want to make sure that there's a rigorous fund administrator, so somebody making sure that their capital account has been properly treated, we provide that service. And so it's audit ready. It's for private equity funds. It can be for family office portfolios or syndicated portfolios. It could be for if you have a new joint venture, we can jump in and do all of these services, or just one.
Perfect. So fund administration. So if you've got a 506c fund or a fund of funds and you're looking for someone, I know there are companies like Invest Next that gets into this, and Avestor. So you're saying that you would be
Those are a competition, Tony. I don't know if
those
you
are
should be saying their names on here. But
understood.
yes,
So now tell me, do you have I know those have platforms, right? Do you have a platform for your
we do.
service? Okay. And
We
what
do.
is that platform?
We
Where is
use
it?
AllView as the platform for that service, but you can't do the detail accounting on one of these capital table accounting platforms. So we use things like Yardi, RealPage, AppFolio, NetSuite, Sage Intacct, and even QuickBooks Online in some cases to be able to run the business. And then we will use AllView for the fund administration component.
Okay, so you would use one or the other of a Yardi, RealPage, AppFolio, or Sage Intacct as
Mm-hmm.
your accounting side of it, and then um, what did you say you would do? I'm
We
just trying to keep up.
and we would basically provide. We could just do the fund administration, allow the business to run on whatever system they want, and we would tie out to the capital account.
Okay.
That's one way to do it. Or we can run the entire platform for a client. So doing the detail accounting work for the business and run their cap table through AllView.
And do you do that as a yearly service, or
Mm.
so is that only for structured funds, or do you do that? I know you mentioned single syndications. Do you also do that on just single syndications?
We do it on single syndications, yes. And any client with a relationship with us, there's only one platform fee. So while the volume of work might adjust the access to our AllView platform and that investor relations portal and all of the way we transact with our clients is all through a single portal. So we have clients that can have 100+ entities, and all of them could be done through our single AllView platform. For instance, that's an example. And some of our clients have told us, we designed this around what other groups don't do, and we want to be able to provide the right fund administration practice. So we've learned from what our competitors don't do, and we try to create the environment for all sizes of clients. Typically, size would be around 50 million plus. So we've got a few that are in the billions dollars of net asset value that we do services for, but we're as low as 50 million is a kind of an entry point for us.
Okay. And so tell me some slight differences that you offer that someone else doesn't offer. Like what makes you better and different?
Well, I think the ability for us to do the accounting down to the property level or down to the company level is a major differentiator. Most of our competition doesn't try to do that work, but the reality is that's where we came from. That's what our business, our CAS business, was based on, was actually doing the operational accounting. That's everything down to transactional accounts payable. Like I said before, setting up a PO system or a sales process, bolting into your CRM, producing rent rolls, and the like. Then we'll also be able to do this very specific accounting around the cap table and with our fund administration platform, and assist with investor relations. So we've got people that are project managers, and so they're not accountants necessarily by trade, but they'll be able to do things like reach out to utility companies and change over addresses and get involved with calling your investors and updating their information, confirming that they've received the K1s. Not only does the system record it, but we've got a personal touch. These are the things that we've heard that our competition, isn't willing to do, and we are client first. So that's our differentiator.
That's interesting. Yeah. That's actually very interesting. So going back here. And so this would all tie in as well. So when we're talking, it would tie in with your fractional CFO service that others don't offer. So yeah, I can see where basically just even with what we've discussed previously, the vertical integration, these other companies are just kind of a one box shop here, right? And so you're still farming out. Now, I would say some of them will go in and offer some quasi stuff with like a online QuickBooks, but nothing. But I think these would be much smaller than what we're discussing, because when we're talking Sage Intacct, AppFolio, these are more established, and want somebody to go in and manage a much bigger operation. Where I think these other ones would lack. So those other ones I think are more structured for people, maybe $5 to $10 million, right? And
We do.
when you get to the size that we're talking about, I don't think that they can really meet the needs of what we're discussing here. I think they would run into it, and I think their whole environment and platform would almost break when we get to this level. If I'm that would be just my experience in understanding those other platforms that I'd mentioned comparative to yours. Is that how you guys see it, and is that really another differentiator for you?
That would be great if theirs were broken and then we could step in. Exactly. But we appreciate that some of our clients are not yet established and that they're aspirational. And so we do have a scale suite solution where we're willing to work with smaller clients.
Okay.
And that is a QuickBooks Online, a type solution where we can plug that in. And we can talk about what it means to get onto the AllView platform and work with their attorneys So we do have that capability. It's a very permission structure. We have to get client acceptance through the firm to be able to bring on clients that are of a smaller size. But
Mhm.
I did 7 years ago, and they're one of our largest clients now. So we're willing to do that.
Awesome. All right. So tell me a bit with the CFO, the fractional CFO service. First of all, I guess with a fractional CFO service, could you explain to the listeners what that means?
Fractional CFO is everything from somebody helping you interpret your financial information, have sophisticated conversations with a banker, maybe put together board packages to be able to talk with your board or your senior LPs. That can be one level of it, but it can also be somebody that tells you where you need debt and how to refinance and how to have conversations with banks. So that's really the fractional CFO role. Um, we blend that with controllership. So sometimes you can have somebody that's really good at closing the month end and understanding how financial statements work, but they don't understand who's going to use them. And that, I don't want to say that all controllers are like that. In fact, many controllers are super sophisticated, but we like to feel like on our team we can blend everything from month end close to talking to your most sophisticated investor. So that's really the fractional CFO service.
Awesome. And so with that, you guys, I'm assuming, offer different engagement amounts. So it's been depending on the person's or the company's situation, you might engage once a month, you might engage once a week, or you might engage multiple times a week, correct?
Everything down to sometimes on Saturday mornings.
Uh,
So
So a
we
lot more versatile than uh, so the advantage of it is uh, them being able to outsource and dependent upon need have a savings from bringing someone in house.
the idea is that you might have a need that you think you're going to fill at some point in the future, and so we can bridge that gap. Or you might have a long-term plan that you only need a fraction of an employee doing a specific role in perpetuity. And with AI nowadays, there are many aspirational companies that think that they will not need to have the same FTEs, full-time equivalents, in their accounting department. Um, I tend to agree with them. We are super powered with what we can do, but we're super powered because we do this same work across many different clients. So we're very efficient, but we also have the best in class tools. We have robotic process automation that happened 15 years ago, and AI now assists with that. So we can be more efficient than what some companies can even build in house because they don't have the time to do it, or it wouldn't make sense for them to build it themselves. Many of these processes and technologies we've built over years, and a lot of R&D and a lot of IP that we keep to ourselves, and other things we share with our clients so that they can build it into their internal ops. Um, and it's an exciting time in accounting. I actually recently put out a post on LinkedIn about BPM is hiring. We're hiring because we know that we need to continue to grow this practice. Um, AI is not going to be the panacea solve all for everybody to just run on their own. Everybody wants a real CPA, an accountant, to be able to talk to them about what it means, what the financial statements means. What were those pipes that were built, that were put together to get this data into a financial statement? They don't want to just rely on AI. Um, we also need to hire straight out of school because these individuals are AI native. They've been working with this since they were freshmen, and we know that they're probably best and most capable to become these superpowered accountants. But they have to do the very baseline work first and understand what debits and credits are. And BPM is here to incubate that and continue to grow our workforce and our tech.
So I see the need for that. I would say, just in my opinion, I think, the fractional CFO piece it's going to continue to grow partially because of AI in a way. And I would say, the baseline workers, um, with the AI that they're adapting, I do still have a concern on what AI is capable of, going to be capable of doing in 2 years, based on 2 years ago, what it was capable of, and what it is now is
Mm.
significantly different. Um, so, when you guys look at that, are you having any plans? I know you're saying that you're not seeing AI because of the personal level, which I agree. I think the strongest, is like someone in your position that's been decades in, uh, AI is going to take a long time to get to a level, and maybe never, right? Because there's human elements and there's knowledge, and uh, I feel like, back to your point, yeah, you want to be able to communicate. Do you feel like there is a little bit of danger for the baseline worker?
I think that over the last 3 years, we've been talking about the danger for the baseline CPA or the baseline accountant, and I actually don't think that it was the right discussion to be having because we still need people to be able to assemble the prompts and check the information so that the managers and partners can buy off on it and have the relationship with the clients. The clients themselves, I mean, if it's an internal accounting department, they can understand the work that's being given to them. But I think increasingly a CPA firm or a consulting firm helping out is going to be the solve for companies. And there are going to be less internal accounting departments because of that. There's so many new businesses popping up. I mean, there
Right.
was a little bit of a stall out after the ZERP era went away, and M&A and venture backed companies slowed down, but it's really coming back in the last 6 months. I mean, we're seeing companies come out of the woodwork. I mean, San Francisco was a ghost town. It really felt like that, and it's all of a sudden bustling and as active as pre 2019. A lot of it is AI, the AI companies, but all of the legacy companies are being powered by the AI as well. So we, in the same way that private equity funds are targeting CPA firms for roll up, what are they seeing the value in a CPA firm? Well, we're a legacy process that is being super powered with AI, and we're going to be able to do more with less is the comment. But
Yeah.
I still think you need every single layer of what we had before, from the entry level associate to the partner that is ultimately directing how we're spending the R&D and blessing the work and having conversations with clients. You just need it will just make a higher value proposition to our clients, but it'll be super powered. So I think that this AI revolution is just creating more work and more great businesses and better accounting solutions for the clients. There was a lot of terrible accounting solutions out there for decades,
I'm correct
and it's
about
all
that.
getting better. That's the end result.
I would have to agree. I think it makes everyone more productive. I don't know that I see where people are going to go away. I think that it's going to, a lot of entry jobs might go away, where, because you could, one person with AI can do the job of two to three people, right? Successfully.
That's right.
And their job, and they do their job much better, and they're more effective. So, I do think it has value. And to your point, there's so many opportunities that this is going to create. It was a lot like, multiple fears as we've transitioned into different aspects, as the economy has transitioned over and over again. There's a lot of fear, but it opens so many doors that those fill a lot of the gaps that everyone's so concerned about. You just have to be agile and ready to shift and move with the changing times, and you can still be highly successful. And
I agree
I think the
wholeheartedly.
wealth
Yeah.
in the world is going to increase with this, right?
Mhm.
Just hopefully the inflation doesn't kill all of it.
Yeah, well, it's deflationary
Yeah.
at the same time as inflationary. It'll be
Mhm.
interesting to see which direction it goes.
Yeah, that's the long-term concern is the major deflationary conditions that could impact everything.
Yeah. Yeah. My undergrad degree was economics. So I'm very passionate about reading and listening to, all of the directional shifts, supply, demand, and where value is going to go. I think we're going to end up, in a more abundant society with better products, and more meaningful, things that we're all doing in our lives.
Absolutely. Well, Mark, it's been a pleasure having you on and getting a quick overview. If people want to find you, what's the best way to reach you?
Best way to reach me is to send me an email. It's mark@bpm.com.
Perfect. And we'll put a link to your website and your story on here. We sincerely appreciate you jumping on. You've gone into so many different things. It was hard to stay in. I don't even think that we hit all of the different pieces that you're touching, but man, it's been great connecting with you and finding out a bit. And now, if on another side, that connection, if someone is interested in potentially discussing, bringing a fund to you to help manage, do they go to the website that you mentioned? Do they
Come to
hit you
me.
up directly? Okay.
Hit me up directly. I'm happy to
Okay.
to discuss it. I get a lot of inbound through clients, referral sources. Some of them don't fit, but I'll always help them find where they should go. So I'm happy to have those discussions.
Fantastic. I'll put it all in the show notes. And Mark, thank you again so much for your time. We've had a pleasure having you on today, sir.
Pleasure being here, Tony. Good to meet you.
You too, sir. Have a great one. Thank you.
All right.